A cautionary message has been sent out by the Securities and Exchange Board of India, and it relates to digital gold. A few of you are wondering what this is about. So first, let me tell you what digital gold is in the first place. This is sold by various sellers, including fintech platforms like Gullak as well as Paytm, and a few jewelers as well. It's 24 karat gold that is sold in digital form, and the equivalent of that in physical gold has to be bought by the seller and kept in a locker and insured. The price of that gold is determined by the wholesale rates, but then you could have a pretty wide variance between different sellers of the gold. So that's what the gold is. What you need to understand is that it's unregulated by either the Securities and Exchange Board of India or the Reserve Bank of India, and it can only be sold on the same platform. Additionally, you could have requirements in terms of the maximum amount that you can invest and the duration that you can hold it for, and there's a 3% GST associated with it as well. Of course, with jewelry there is a 3%, but then if you invest in an ETF, gold ETF, or a mutual fund scheme, there is no 3% GST. What is the SEBI saying? It's warning that this digital gold is completely outside its purview, and it's also saying that such gold products may entail risks for the counterparty as well as operational risks. This is quite significant. None of the investor protection mechanisms under securities market purview shall be applicable, is what the SEBI says. So what should you do? You should perhaps go towards the ETF route, which is regulated by the SEBI. That is, if you have a demat account. If you don't have a demat account, you can of course opt for a gold mutual fund. And there's quite a lot of gold that is held by the mutual fund industry through the ETF route. In fact, 90,000 crore rupees at last count was the assets under management under gold ETFs, and they're rising quite substantially.